All right, a warm welcome to everyone online. We're so pleased that you're spending this hour with us as we're unpacking the Corporate Sustainability Due Diligence Directive. We've been very excited to host you for this online session and look forward to sharing with you what we know about the directive, and also, of course, to hear all of your good questions about it. My name is Anina Kristinsson. I'm a managing partner here at Nordic Sustainability. I've been working with regulatory affairs and sustainability for the past decade or so, and today I'm the moderator of this 1-hour session. I'm joined by two fantastic experts who are so knowledgeable about both this directive and the due diligence space. I'm really excited to introduce them both to you. We have Katharina Bierre, who is a senior consultant here at Nordic Sustainability. Anna is also our CSDDD lead. Anna has worked with this space for quite some time, and she's also been working a lot with the CSRD, which is, of course, on top of everyone's minds these days. And she will also be able to bridge the gap between these two directives and also explain some of the connecting points as we then have the discussion around the directive and how this really will influence companies. Before joining Nordic Sustainability, Anna was with PwC and also Velux, where she was the policy advisor in the regulatory affairs team. Anna will be the primary speaker today and will cover a lot of the different parts of the directive and what it means for companies. And in a little while, the scene will be Anna's. But we are also joined by Signe Mørk Sørensen, who I'm equally excited to introduce. Signe will be an expert commentator in this session. Signe has been working with over 20 companies on their due diligence efforts in the past few years. And Signe has so many credentials in this space that I even need to revisit my notes here to make sure that I actually remember all of them. Signe has developed different tools and templates for practical DD implementation. She's conducted trainings with several businesses, written the DD guidance for Ethical Trade Denmark, Copenhagen Business Hub, and the Danish Business Authority. And of course, Signe has also been a close collaborator of us here in Nordic Sustainability during the past year, where we've co-developed the CSDDD maturity screening tool, which Anna and Signe will also speaking a little bit more about at the end of this session. So a very warm welcome to both you, Anna and Signe, and a warm welcome to everyone online as well. Before we begin, a few housekeeping rules. You will see that you have a Q&A button at the lower bar on your screens. Everyone should be able to see it. It's also, in this example, visual highlighted in red. Please use this function to ask any questions you might have. We have a lot of people on the call here today, and this will be our way of managing the Q&A and making sure that we capture all of the questions you might have. As the moderator, I will keep an eye out on all of the questions that come and do my very best to make sure we cover, if not all of them, the majority of them. And we'll have, of course, also a Q&A discussion after Anna's presentation, where both Signe and Anna will be chiming into the discussion. You will probably also be wondering, do I get the materials? Yes, you will get all of the materials we show you today, and you will also get this recording if you, for example, want to revisit it or share it onwards with a colleague. So with those very practical notes, we have 56 minutes to spend on the CSDDD, and let's make sure to make the most out of it. Anna, with these introductory words, the floor is yours.
Thanks a lot, Nina, and thanks for the nice introduction. That means I can go right to the substance. But before I do that, I also want to wish everyone a nice welcome. Unfortunately, I can't see any of you out there, but I'm very pleased to be your presenter here today. I would like to kick off this webinar with some facts from the World Benchmarking Alliance. What they have done is that they have assessed the maturity of the 2,000 most influential companies with regards to human rights due diligence and taken that as a proxy for how ready those companies are to comply with CSDDD. And I think the numbers are quite concerning. What this assessment shows is that 80% of the companies, they have scored 0 on key steps of human rights due diligence implementation. It's those steps concerning identifying, assessing, and taking action on impacts. And we will also talk much more about what those steps consider later. Additionally, only 9% of the companies that commit to respecting human rights can actually demonstrate evidence that they engage with affected or potentially affected stakeholders. And that's, of course, also a key element of due diligence, that you are not only required to do it well, but you are also required to document it. Finally, the assessment shows that 91% of the companies have a grievance mechanism available. However, only 5% have demonstrated that they have secured rights holder trust, and only 10% secured right holder ownership in designing this grievance mechanisms. So what the World's Benchmarking Alliance do on the backdrop of these numbers is that they conclude that the majority of the world's 2,000 most influential companies are not ready to comply with CSDDD. Now, of course, not all of these 2,000 companies fall under the CSDDD legislation, but for those in scope, it means that with the status quo, they actually risk facing a quite significant fine for not complying with CSDDD. And that fine, that can be potentially be bigger than 5% of global net turnover. The exact number is subject to national implementation, so we don't know exactly what that will look like, but just to say it's a quite significant amount. Additionally, the World Benchmarking Alliance estimate that 160 million workers worldwide are affected by the operations of these companies, and therefore are lacking sufficient protection for their human rights. And that's the reason why we are here, because we are on a mission to close this gap by helping our clients. So, and before we get into the details and how to do that, I just want to quickly say what we're going to touch upon in this webinar today. First, I would say a little bit about the legislative background surrounding CSDDD. We will also be talking about what the benefits of working with due diligence, and of course, most importantly, dive into CSDDD and the different key features in there. And finally, we will discuss how to get started. It's a lot of things what we need to cover in short time, so let's get started. So the 5th of July this year was a day that many of us had really waited for after some intense negotiations during the spring, where the CSDDD, the directive, was close to being lost completely. On this day, the final legislative text was published in the EU journal. And then later on July 26, it entered into force. July 26, it's a very important date to remember, because that will be the day that companies are also required to comply. But we will talk more about that later. While this directive is, of course, new, the content is not. The directive builds upon the UNGP's and OECD's international guidelines dating back to 2011 and updated again last year in 2023. And then later on in 2018, this was further supplemented with a more practical guidance to due diligence. It is the 6-step due diligence process framework that many of you may also know and work with already. And what those international guidelines do is that they promote this common framework for risk-based due diligence, and thereby defining what responsible business conduct mean. And the guidelines do so by also defining the process for identifying and assessing negative impacts in both own operations and value chain, and most importantly, also how companies are to respond to these impacts. So for those of you out there that have just, or maybe some time ago, conducted your first double materiality assessment, that is essentially the methodology that you have also been using there. So there is the first link that is important to understand. And I already mentioned that it was some quite dramatic and intense negotiations over the CSDDD this spring. And as a result, the threshold for companies in scope of this legislation was severely watered down. And what the lawmakers ultimately agreed on was to focus on the very biggest companies and phasing them in over a 3-year period, starting with the biggest one. So here again, on July 26, 2027, there will be the first batch of companies, the biggest of the biggest, so to speak. It will be EU companies with more than 5,000 employees and more than 1.5 billion euro in global net turnover. Then 1 year later, it will be companies with more than 3,000 employees and 900 million euro in global net turnover. And then finally, it will be the EU companies with more than 1,000 employees and 450 million euro in global net turnover. Then there are also requirements for non-EU companies. Those are based on revenue generated inside the union and follows the same criteria as for and phase-in as for EU companies. Finally, it's also important to note that ultimate parent companies of groups that reach the thresholds on a consolidated level are also in scope. And if a parent company is covered, they need to cover all their subsidiaries as a part of the due diligence. And if we zoom out a bit now and look a bit at the overall legislative landscape in the EU, there has been a wave of different legislation targeting due diligence in different ways. CSDDD obviously stands out here as the shining star. And one of the reasons why this legislation was introduced was because there was a wish to harmonize standards across the European Union and create what we call a level playing field for companies. Because as you can see on the right side of the screen, there are various national due diligence legislation in place already. It is, for example, the German Supply Chain Act or the Norwegian Transparency Act. And of course, that can make it, and even though they're all built on the international guidelines, there are some significant differences, and that, of course, can be difficult for companies to navigate. Then there are also multiple references to due diligence in CSRD and the supporting reporting standard, ESRS. We have already mentioned one link already. It's important to say that CSRD is not a conduct directive, but a reporting directive, where companies need to report on their due diligence process, even if they don't have one. However, as we also have touched upon already, the double materiality methodology is aligned with the international standards on due diligence, and the idea is that in the future, it will be companies' due diligence process that will feed into the double materiality and inform it moving forward. Then there are also references in the EU taxonomy. The EU taxonomy indirectly introduced a due diligence requirement through the minimum social safeguard. There is still some uncertainty whether CSDDD can make it up for compliance with these safeguards. It's still, I haven't seen any official communication yet. Then there is the forced labor regulation from March. This directive was quietly passed while the drama over the CSDDD negotiations took all the spotlight. But what that essentially do is that it introduces indirectly a due diligence requirement by banning products from the EU markets that have been made using forced labor. Finally, there's also the deforestation regulation that also indirectly introduces a due diligence requirement to ensure that products are free of deforestation. Good. So that was a quick overview of the various due diligence legislation out there and the landscape surrounding CSDDD. And now, before we immerse ourselves into the details of CSDDD, I would like to just address some of the benefits of working with due diligence more broadly. And as also the intense negotiation shed light on, the directive has of course been met with quite some concern. And there is no doubt that the directive will have a quite significant impact on businesses in terms of cost and administrative burden, especially in the short term when it's all about getting ready to the minimal level of compliance. Of course, we can always hope that there are some companies out there that would try to go beyond that. But just to get to that level, there will be costs associated. However, while there are obvious hurdles to CSDDD or due diligence implementation, benefits will outweigh the cost with time. And I have a personal theory that we just haven't fully realized the magnitude of this potential yet. Since impacts are closely connected to financial risk, when addressing these impacts as a part of our due diligence, that will also help, at the same time, help companies to mitigate their financial risk to the company before they become unmanageable. And in that sense, helping companies to build financial resilience. And exactly financial resilience, that has always been considered a good business in the field of enterprise risk. And yet we still haven't been able to fully grasp what are the financial implications of certain sustainability-related risk. It's something that the World Bank has been trying to promote for years. And it was also one of the main wishes for the European Commission when they published this CSDDD proposal to build financial resilience for companies within the Union. Luckily, a lot of companies have started to implement sustainability into their enterprise risk already, either as a result of their double materiality assessment or their work with TCFD or other frameworks. And while it has created, at least we have seen a little bit of uncomfortableness for risk managers out there, we have actually received quite a lot of positive feedback from clients that have started to work proactively with sustainability risks to the business. And beside this proactive risk mitigation, there are, of course, also many other associated benefits for the company of implementing due diligence. When implementing due diligence, that will also mean that companies can support compliance with other regulations, European or national, for instance, CSRD or forced labor regulations. Additionally, companies, they will get solid documentation for the work on responsible business conduct. And that is especially relevant for those of you out there that are to do CSRD reporting, both for the sake of the actual disclosures, but also for the assurance process. Then we also see an increasing number of companies getting better access to finance because they are able to demonstrate that they are proactive, and they can document it, of course, work with the impact. And then it also has positive effects on employee satisfaction and retention, especially when we talk attraction and retention of the younger generations. So while the carrot is obviously there's also a little bit of a stick in case of non-action. And some of these a little more boring things are, of course, monetary penalties due to non-compliance with other EU legislations, not being able to communicate due diligence under the CSRD, not being able to act on supply chain disruptions. It can lead to losing clients, reputational damages, poor access to finance, and many more things. So on that note, let's dig into the CSDDD to understand what is it then that companies are required to do. And now I have already mentioned a couple of times that CSDDD and other due diligence legislation out there, of course, built upon the international guidelines. But again, it's important to say that there are some significant differences to be aware of. And what we have highlighted on this slide is some of the key principles in CSDDD. And what is quite unique for CSDDD is that it introduces this civil liability mechanism and penalties. I also mentioned earlier that could result in a fine that could potentially be bigger than 5% of companies' global net turnover. The reason why I say potentially is because it's subject to national implementation. But what is given by the EU is that the maximum fine needs to be minimum 5%. So that's what we know now. Then CSDDD also has this risk-based, or outlines this risk-based approach. That means that adverse human rights and environmental impacts, they are based on both severity and likelihood of occurrence. So in the same way that we are also used to prioritize impacts when we do a double materiality assessment. It's important to know that the scope is a little bit different. There's also some extra requirements on how we request information from our suppliers. Here again, it's risk-based. So there is also a little bit flexibility that you don't need to go out and request information from all your suppliers. There are ways of prioritizing and focus on where impacts are most likely to occur and where they are most severe. Then CSDDD also state that risk shifting is not allowed. What that means is that companies cannot shift the responsibility imposed by CSDDD onto their suppliers. And that could be the responsibility to manage human rights impacts that the company is responsible for. And then there are CSDDD also outline in what way companies are responsible, and we will be going into the detail of that later. Then also in line with the international guidelines, meaningful stakeholder engagement is required throughout the entire due diligence process. We will dig into that also later. And there is also a value chain focus, meaning that companies should not only act upon impacts in their own operations, but also the wider value chain. Here is a significant difference from both actually CSRD and the international guidelines in the way that the value chain is somewhat limited. Own operations and upstream activities are in scope in the way that we are used to do it. But when it comes to downstream value chain activities, those are limited to distribution, transport, and storage of a product. So it's a quite significant difference. That means that if you are a social media platform, for instance, you should not include users of your platform, or if you're a production company, the users of your product. But here again, what we advise here in Nordic Sustainability is to follow the international guidelines, and that's also in line with CSRD. Then finally, as a unique thing to CSDDD, the directive introduced a requirement to have a climate transition plan that is in line with the Paris Agreement. What that essentially says is that a company should have science-based targets, or at least targets that are set using the science-based target methodology. And the reason for that is that is the only framework we have right now that have translated the Paris Agreement into something that is operational for companies. And for those of you that are familiar with this 6-step due diligence model, so this practical guideline that was introduced in 2018, the good news is that the directive is actually structured according to this model or framework. So if we start with step 1, that is embedding responsible business conduct into policies and management system, that is outlined in Article 7 of the directive. When it comes to identifying and assessing adverse impacts in step 2, so that is the risk or the impact assessment, that is outlined in Article 8 and 9. Step 3, that is about taking action. So that means ceasing, preventing, or mitigating impacts. That is outlined in Article 10 and 11. And there are also outlined some appropriate responses of how to do that in order to create legal certainty for the companies. Then when it comes to step 4, that is about tracking the implementation and the result, that's outlined in Article 15, and communication in Article 16. And finally, step number 6 about providing remediation, that is outlined in Article 12 and 14. So now, for those of you that have not dived into the directive yet, here you have an easy way into it or structure your reading. Again, I have said it also before, this 6-step due diligence process is central to a lot of the legislative frameworks out there, but there are some differences that we need to be aware of. The first and most important one is, of course, what companies are in scope. So if you use the example of CSDDD, that is all the biggest company. But when, for instance, we talk the EU forced labor ban, then it's actually all companies and all products on this very specific labor ban issue. Then we also have the CSRD that represents somewhere in the middle, that also includes big companies and smaller SMEs. Then, of course, the next really important thing to know is how is due diligence actually introduced? And you can say that in CSDDD, it's a mandatory requirement to implement due diligence, whereas in other frameworks or in other legislation, such as the EU forced labor ban, it's an indirect requirement. You can say it's a bit the same with CSRD. It's not a conduct directive. It only requires you to disclose on your due diligence, but the fact that you are to disclose it may have this indirect effect that you as a company decide to implement it. Then it's also the what is also important to know what is actually included. So in the case of CSDDD, It's human rights and environment and climate transition plan. And there is an annex in the same way that you have an annex or a list of subject matters that are covered in CSRD, where you can see exactly what human rights and environmental rights that are included. If we compare that, for instance, to the forced labor ban, then it's a single issue that is included here. And again, if we look at CSRD, it has its own list of sustainability matters using the CSRD lingo that are used there. And I would like to say that there are some links between the subject or the sustainability matters in CSRD and the human rights and environmental rights in CSDDD, but they are not aligned one-to-one. So that's important to also be aware of, that the scope in terms of human rights is bigger. And then we have also addressed it already. There's also an aspect of what parts of the value chain are actually included. In most of the frameworks, it's the full value chain, but it has this limitation when it comes to CSDDD. And then finally, the big when does it come into force? So CSDDD will be phased in from 2027, but we also have other frameworks such as EU taxonomy that are actually in force already. Good. Let's dig into some of those key features that we addressed some slides ago. The first one that I would like to dig in is stakeholder engagement that is required throughout the entire due diligence process. And here it's important to note the throughout, because it's a process that needs to be done continuously. So some of you may have done stakeholder engagement as this kind of static one-time off exercise in double materiality assessment. And it's a good start, but it's not enough. It should go into a more continuous dialogue with stakeholders. It's also worth noticing the word or the term meaningful. What that means is that you as a company needs to thoroughly consider which stakeholders to involve, how to involve them, and for what purpose. And here the focus are on the affected stakeholders or their legitimate representatives. In some cases, it will not be possible to have dialogue with the stakeholders directly. Or in that sense, it's also different to the CSDDD and also CSRD and the double materiality assessment, where you also need to take into account readers of your sustainability report, such as banks and so on. And while, of course, banks also can have quite useful and interesting input, again, the focus is here affected stakeholders or their legitimate representatives. And some of those examples are communities, employees, consumers, trade unions and workers' representatives, workers of the upstream suppliers, business partners, national human rights and environmental institutions, and civil society organizations. So whether the company has an obligation to act upon an adverse impact depends on the type of the involvement. So when the company needs to take measures to mitigate and remediate the adverse impact with a specific result, that's when, for instance, the impact exists in a company's own operation. I think that makes very good sense. For instance, if there is a fatality in your operations, then you are required to do something about it. It can also be in the case where a company has the main operational leverage over a supplier and is the supplier's own customer, or when the company is jointly causing the adverse impact. However, the company is not expected to solve the situation themselves, but needs to do the best effort to mitigate them when the adverse impact lies in the company's value chain and the company is not directly causing the adverse impact. Again, here the company is not expected to solve the situation themselves, but must do their best efforts to mitigate them. And what is also important to say that when mitigating them, there are some within the directive some appropriate measures that are outlined, but multi-stakeholder initiatives are also allowed. For the sake of time, I'm going to skip this summary slide and move on to the next section that is really going into the discussion about how to get started, how to start preparing for CSDDD. And what we have done together in Nordic Sustainability and together with Signe is that we have started mapping out this high-level implementation timeline. So we have mapped what we believe are quite critical steps towards full CSDDD implementation and the estimated time for each step. It's important to say that these timings are based on average estimation, and this may vary a lot from the individual company or group, such as the complexity in both the organizational setup, but also the value chains. Nonetheless, I think it's quite evident that implementing due diligence takes time. And whereas with the voluntary standards, there was more like, let's do something and gradually improve. Now there is a hard deadline of when companies or those in scope needs to be ready. So while this time pressure is quite evident, the good news is that there are some preparatory steps that can be carried out already within 1 to 3 months. And those are the first 3 steps that we have outlined on the timeline. Of course, it's important to start building the knowledge and understanding the directive. A lot of you are present here today, and I assume that's also because you are already on the journey to build that knowledge. Maybe you have also read the directive, and that's of course also important to do. Then the next step, if you have due diligence processes in place already, many of you companies will have that. Maybe you are not fully aware of it, but then to map your current materiality level and identify the critical gaps when you then read into the legislation and what is required there. And based on that performance, you can create an implementation plan for having specific areas of attention. Then the next steps are more implementation oriented. There is something about mapping or updating, if you have already done that as a part of your double materiality assessment, your value chain. We have put in a timing of 6 to 12 months. That's probably much longer that you have spent in your double materiality assessment if you have done that. And that's because there are requirements to the depth of the information that you need to base this on, and you are required to go out and also assess suppliers, and that can be a little bit of a complicated matter, or at least it takes time. Then there's also an element of starting to plan and implement meaningful stakeholder engagement. Again, it can be, even though it's not the first step, it can be good to do that already, because that can inform your impact assessment. Then you need to integrate it into policies and management system, have a due diligence policy, implement into the overall policies of the company, do the impact or the risk assessment. Here again, there are some requirements. It's a different scope than the double materiality assessment under CSRD. There are also a bit more requirements of how in-depth you do this assessment. And then once you're over that, you can start saying, okay, how do we actually start working with the negative impacts we have then identified? Set up qualitative and quantitative indicators to track your progress, set up a grievance mechanism, and communicate your effort, ideally as a part of your annual report. So that was a lot of steps. I hope you are still with me out there and are still interested. But what we have done in Nordic Sustainability together with Signe is that to help companies prepare for CSDDD, so the first 3 preparatory steps that I outlined on the previous slide, we have built this CSDDD maturity tool. The idea is really to highlight areas with risk of non-compliance, but also to to suggest or to define a path for areas of improvement based on, of course, both the performance that has been evaluated, but also what is considered best practice. And this tool that we have created is ideal for companies that have some due diligence processes in place already and wish to know how do we go from there up to that level that is required by CSDDD and where should we prioritize efforts. It can also serve for companies that are new to due diligence and would like kind of an easy way in to understand and grasp the directive. And so with these 2 very different segments in mind, we have tried to really put ourselves in the shoes of the companies and design a tool with some helpful features for the client. And what the first feature I would like to highlight is that we have simplified and organize the legislative text into some digestible pieces of information. I'm sure that a lot of you have read legislation and regulation. It's page up, it's down. It can be very difficult to jump between chapters and sections. So we have both extracted all that information, we have categorized the information and extracted certain information in a way that you are able to filter it and navigate it in various ways. Then we have spent, it's probably where we have spent the most time, is taking all these legal provisions in the directive and translate it into a set of operational questions and to understand what is it actually that the directive is asking. Again, it's a legislative text, it's not operational. So that's why we have done this exercise to make it meaningful for companies. Then we have also provided guidance and reference to other standards and best practice where we believe that the directives is weak or vague. And for instance, there is a requirement that companies need to implement due diligence into risk management systems, but without really defining what does that actually mean. So there we've spent quite a lot of time to mapping best practice and other standards and complemented our tool with this. As documentation is a big part, we have also included documentation aspects, so companies are able to also very systematically assess the documentation for each of the requirements in the legislation. Then the entire tool consists of 131 different questions, but for that to be meaningful, we have also do some summaries displayed in various dashboards. So can give some analytical insights on how to actually build a roadmap. And that's actually the last point, that we have also built in some features so you can go from the assessment to then actually building a roadmap. So should you wish to hear more about what does include, feel free to reach out to either Anina, Signe, or me, and we're also happy to give you a demo of the tool. And I think I have now used my time, maybe a little bit more, so I will leave the forum to questions.
Thank you so much, Anna, for that in-depth presentation. All of you online listening in, you're welcome also to use the little react buttons if you want to give Anna applaud. I certainly want to give you Anna a big clap. Thank you so much for this presentation. It was quite the go through. We've also gotten quite a few questions coming in here in the Q&A section. And as I mentioned in the beginning, please do post the questions. I see all of them and I will try and cover as many as we can with the time that we have left. And if there are questions we aren't able to cover during the session, we will see if we can get to them in the send out later on. Also, for those who joined a few minutes into the session, we are not only joined by our in-house expert Anna here, but also our close collaborator Signe Mørk Sørensen, who is a founder and CEO of Impact CSR. Signe has worked with due diligence with over 20 companies and really has a lot of hands-on experience also of how this looks like when you start rolling this out. Of course, CSDDD is still new and nobody is yet fully implementing all parts of it. But Signe, I also wanted to ask you, what is it that you typically see when you start working with a company who's new to due diligence? What are some of the first hurdles they need to overcome?
Yeah, that is a really good question, and thanks for the invitation today. I've been really looking forward to this really interesting session. Of course, I find it interesting. I think one of the biggest hurdles that I see in almost every company is in the beginning to actually understand what is required. If you read the international guidelines behind the directive and the directive itself, it can be quite difficult for companies to understand what is required from our company, and how do we start implementing the six steps due diligence process. I definitely see that as the biggest challenge for many companies. It's a new terminology. There are like concepts that companies need to understand to fully gain what is required. And then when companies start working on it, I see that there is also a challenge with like internal buy-in. I think in many companies this process is considered something that is done in procurement, and that's fine. But actually due diligence is not just about having some processes. It also refers to like responsible business conduct on a more overall level, and that requires both like horizontal integration across companies, but also you can say vertical integration from the top level and down to like throughout the organization. So I also see that as one of the hurdles in companies. Yeah.
And which departments would you say that are typically the key stakeholders in a due diligence implementation?
It varies from company to company, but I would definitely say that when we look at like the value chain focus, then the departments that deal with the like supplier collaboration, and that they are of course important. But in many companies, departments such as design and R&D, if we talk about like product development, that can also play quite a crucial role, because that's where the product is born or is made. And the decisions there actually it has something quite a lot to do with how you then choose your suppliers, what suppliers you work with, and so on. And then one important thing in the directive is that it's written quite clearly that companies should look at their own practices as well. It mentioned, for example, purchasing practices. And if a company is to look at their own purchasing practices to see if they actually have an impact, a negative impact in the supply chain, then to change that of course involves management as well, because that is something that is quite deeply embedded in a company. So the management is of course super critical as well.
Mm-hmm. We had quite a few questions coming here, both throughout your presentation, Anna, and I can see them popping in. So please keep doing that. A few questions had to do with SMEs. So would we, or would you, Signe, and also you, Anna, please chime in here. Would you still recommend that companies that aren't in scope of the CSDDD would start preparing? So even if you aren't legally required, should you still start implementing relevant aspects of the directive? And also, as a sub-question to that, would it be useful to connect that work to other reporting requirements, for example, that are also coming towards the SMEs? Maybe you, Signe, could start with your thoughts, and Anna, you could elaborate especially on the reporting side.
The very short and the clear answer is yes. It definitely makes sense. I have helped quite a lot of SMEs in getting started with due diligence, both for the purpose of getting ready to be a good collaborating partner if you have customers that are in scope of CSDDD, but there are many more advantages of getting started with sustainability due diligence. It is the recognized standard for responsible business conduct. So if companies want to work with responsibility, sustainability, ESG, whatever it's called, of course, they can find their own way through it, but here there is actually a recognized method that SMEs can use as support and guidance to figure out how to actually work with this in a strategic and systematic way, where they're also able to document what they're doing. Yeah.
And would you say that the timeline for smaller companies, now we showed an example of what it could take for a larger business to work with this, would you say that it takes as long for a smaller company to implement these changes, or how do you see that, Signe?
It also depends on the company. That's of course not a really clear answer, but I would say that if it's a company that does not have anyone responsible for sustainability or ESG, then my experience is that it takes longer because it takes time. You need to put aside resources, and for many SMEs, they have they don't have as complex a company set up with they have often less suppliers and a more simple company set up, but they also often have less resources. And maybe I would say that my experience is that it takes the same time as Anna showed on the slide. Yeah.
Thank you, Signe. Anna, do you want to elaborate a little bit from your perspective? Let's stay with the SME question for a while, and then soon we're going to look at big complex value chains. But Anna, from a reporting point of view, and SMEs, what's your comments there?
Yeah, maybe I can start answering the first question. Yes, SMEs should definitely start. I've been fortunate to meet with SMEs in different settings where I have been teaching. So I also got a little bit feedback on how they experience. And even now with CSDDD not even being into force, they already experiencing to have a lot of requests from bigger companies that they are either supplying, so data requests. So that's of course a big concern of how can small SMEs respond to that. I think there is it's twofold. Companies or SMEs needs to get started to respond to these requests that are already coming in, and that I think will only be more of with the CSDDD. But it's also important to be aware that in CSDDD they're actually built in some safeguards for the SMEs in a way that the big companies are actually also required to support the SMEs with also data and so on. So it's important to be mindful of that if you are an SME and getting a little bit scared of all the requests that you will soon receiving. So regarding the reporting, now I'm not sure what reporting requirements that was referred to, but I would say it's actually CSRD, and there is also an associated way of doing it for SMEs, the VSME standard, I believe. And I think these are great starting points for due diligence, at least for the CSRD. I know for sure that they both methodology-wise, but also the disclosure requirements are very much linked to due diligence practice. So all the elements where you have to disclose on policies, actions, and targets, that is essentially key steps of the due diligence. Again, CSRD doesn't mandate that you need to have policies, actions, and targets in place, but you are to disclose on it. So, and then by implementing due diligence, you will actually be able to disclose your performance and improve it and track it. Yeah.
Great. Let's shift then our focus a little bit, because in the other end of the questions we've received here, we have complex value chains, a lot of stakeholders. I'm going to read a section of a question we got here. Considering the complex global supply chains many companies manage, how can organizations effectively prioritize stakeholder engagement, particularly in regions where transparency is low and governance is weak, while still meeting the rigorous standards set by the CSDDD? What a great question, because this is, of course, a really big challenge a lot of companies will face. And there's a second part to the question as well, which has to do with, are there examples of maybe any innovative approaches of how this is done today? Are there partnerships or technologies that you've seen and have seen being utilized with the companies that you're working with? Or how does a big company actually go about setting these efficient stakeholder channels? It's a big question. I'm going to start by giving the word to you, Signe.
Yeah, that is a really, really good question. And I think that, well, of course, it depends on the sector and the country and the complexity, but I would definitely say that it's a way of looking at it is maybe to find some organizations representing the stakeholders that you need to engage to understand the impacts in your value chain. And then I know that there are also several solutions, like digital solutions for effective grievance mechanisms, that you can also use as an input from your stakeholders in a meaningful way.
Mm. Anna, anything you would like to add here?
Just need to unmute. Yeah, I think it's a big question, especially also when it comes to the risk assessment. How do you get meaningful? I think there are a lot of great like tech solutions out there, AI models using transport data, blockchain, and so on that you can leverage. I think what is a risk is that you don't that you need also to complement with kind of local sources. So you can scrap a lot of information from the World Wide Web and you can extrapolate that, but it's very important that it's going to be, let's say you do that on a specific issue in China, for instance, that you complement this with like a local source that can go in and understand the impact. There are a lot of things, and it's a very it's for sure a complex question.
And I think also one of the key things we see in the dialogue we have with companies is that it takes a lot of time to build those efficient channels and to also select the channels you prioritize. We are soon at the end of the webinar, and I can already tell that we won't be able to cover all the questions. So again, we'll try and also reply as many as we can after the webinar. But I do want to ask a question that has to do with a posting we got here in the chat, which has to do with a company that has many different types of products and services. And the question poster asks, from the OECD guidance, I understand we'd have to zoom in on all high-risk product and service categories. Is it true that this has to be done per product or even product component/material? Very complex question. Or do we do this on a more high-level approach? Signe, in terms of kind of how you interpret the OECD guidance and also CSDDD, how would you answer this question?
Good question. It is actually a really good question, because I think it's a situation for many companies. And I think my way of to approach this is to like start on a more high level to understand like the broad product categories, and then zoom in on where the risks are most severe and most likely to occur, and then internally keep records of what have we actually assessed and when are we going to assess the next ones, because it's of course obvious that you cannot do everything at once. So this about having like a transparent plan to decide and also to be able to show how you in a company is going to do this very important assessments.
And that actually ties to another question we got in terms of the usage of the tool. If we would focus the assessment on doing it on the value chain as a whole, so top down, or to zoom in and do the highest risk products following the risk-based approach. So what you're also saying, Signe, that it is very much a risk-based approach that we would also apply, but of course you can almost not escape also doing a little bit of top down to get the full picture. Anna, you get the closing words here as we're about to round this webinar off. Is there anything that you would like to add to this topic?
I think it's just really both the blessing and the curse with the risk-based approach that are built into the directive. It is essentially meant to give companies, especially SMEs, a little bit of flexibility also when they do this assessment. On the other hand, it comes with kind of legal uncertainty. It is a difficult question to answer. It's also where I really hope that the Commission, once they have published their guidance, can provide even more clarity. But of course, really agree with what Signe said.
Fantastic. And now we are at the top of the hour. We could easily, I think, spend at least half an hour more on this topic. And already I can share that we will be hosting more webinars on the topic of CSDDD. And also all of you will get the materials from today, the recording, as well as also an invitation to subscribe to our newsletter, where we on an ongoing basis write about the CSDDD, the CSRD, and all of the fun things that are going on in the regulatory sustainability space right now. So for today, thank you so much for tuning in. It's been a pleasure to host all of you. Thank you for all the questions, and we'll do our very best to reply also to the ones you posted that we did not have time to cover here in this broadcast. Thank you so much, and hope to see you again.